Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to take a look at a Elliott 5-wave sequence and see what happens once a 5-wave sequence is complete. As an example, I'd like to have a look at the Indian markets again, and this time look at the BankNifty, which is one of the main indices over there in India. But as usual, we have to start with our risk disclaimer. Remind you that all examples in these videos should be considered as hypothetical. No trades are actually taken, they're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing. Put another way, all professional traders know and understand, but more importantly accept that losses can and will and do unfold. It's an important point that any trading strategy you'll approach the markets with will always have losing trades. That's important to understand. Right, this is a 15-minute chart of the BankNifty. I'm using our add-ons for NinjaTrader 8 in this video here, and I just want to show you what happens typically after we get a completed 5-wave sequence. If you remember in our last video I was looking at the Nifty, but I also had a quick look at the BankNifty, where if we look at the decline down into this low a couple of days ago, if I right mouse click over this low and I choose Elliott wave intermediate, you can see this was found as a 5-wave sequence, 1, 2, 3, 4, 5, with the low unfolding, with the low unfolding right at the minimum wave 5 WPT. So what happens after you get a nice 5-wave sequence like this? Now you remember, as a backdrop on this, we teach that markets move in cycles, and 50% of the time basically markets are random, so you can't do any kind of analysis. That's typically why standard technical analysis or standard Elliott wave analysis doesn't seem to work. This is why I've developed my unique isolation approach to Elliott wave, where we look basically in isolation when the pattern's actually clear, and then we don't tend to use it for forecasting, because we know that markets tend to go random in cycles, and that's why patterns tend to break down. But typically what we have noticed is after we get a completed 5-wave sequence, like we have down to this low, typically the initial target or the first target of a completed 5-wave sequence is the DP from the prior wave 4. This is also the last swing into the low, which you can see down here. So we go back to the wave 4 high, which is here. We right mouse click, we do decision point, and this gives us an initial target. And there it is. If we move forward, we can see that the BankNifty, again this is on a 15-minute chart, reached this level here the next day, but then exceeded it. You can see we got 2 consecutive closes beyond this DP here. So what I want to look at in this video is where's the next target after the DP from the prior wave 4 has been exceeded. Well, normally this indicates that the market's strong, and then we're going to get a retracement of the complete prior 5-wave sequence. So this entire 5-wave sequence here will normally get retraced. So what is the target that we now use? Well, we go back to the start of the sequence, which you can see is right at this high here. Nice 5-wave sequence down here, right at the high here. We right mouse click, we do decision point, and as you can see that's right up on the chart up there. So this would be the initial target. Now remember, we don't use this for training purposes on this particular chart. What we do is if the market gets into these levels, we then look to try and uncover trades on the shorter time frame. But I just wanted to see what the BankNifty's done over the last couple of days. Well, if we look at today, you can see this is what the BankNifty has done absolutely perfectly. It's carried on up and up and up and up into today, where it hit this 15-minute resistance area, which again was, this would have been on the chart in a day in advance. In other words, yesterday you could have put this DP on the chart knowing it was an area of potential resistance. So today, which is June the 18th, you'd have known that this was an area where the market was possibly going to make a reversal. Okay, let's now move down to the shorter time frame chart to see whether we get any trade setups at this higher time frame resistance. So remember, that would have been there in advance, preparing you ready for potential resistance today. So if we now go down to the shorter time frame chart, let's see what the market did today. I'll just take that lower DP off the chart so it doesn't confuse us. But you can see this is what happened today. The market went up, came down a bit, went up, but then you see what happened here. We actually got a DP sell right at this higher time frame resistance. Our MTP trend was grey stroke red, so that indicated that the market was in the process of making a potential reversal. So can you see as this was at a higher time frame resistance, this DP sell, in other words sell setups, would be good ones to take. This TS3 buy setup and this history triangle here, even though they were still on black MTP trends, would not be good ones to take because the market was likely to decline. In fact, to go back a bit there, was likely to decline because it was coming off this higher time frame resistance. So if I right mouse click over this red sell bar, do analysis, this would be our trade setup. Remember, we use position sizing to vary the number of lots, contracts or shares to keep your initial risk small and under control. In this case, less than 2% of a sample 670,000 rupee account. You can see there, you can change the account size if you want and have it in different currencies if you want as well. So let's see what the market did. And as you can see, it chopped around sideways for a while, started to decline, hit this target here. Now the question is, do you come out at this profit target here, or how do you manage the trade? Well, if you had come out at this profit target, this would have been a good trade, not because the profit was big in rupees, but because it was big in risk to reward. As you can see here, our profit here would have been approximately 5.5 times greater than the initial risk. But now we look down to our MTP trend indicator and see whether it's either strong or weak. In other words, is this indicator beyond these grey bands? Can you see these horizontal grey bands? If it's below these grey bands, we say that the market's weak, in other words chopping sideways, and we'd want to come out at our profit targets. If it's strong, as it is in this case, can you see here it's gone beyond this grey strength band? If it's strong, we assume the market is also strong and therefore likely to run a bit further, so we then swap to our ATR stops, which are our blue and red dots for trade management. So that means if I scroll forward, it means that the red dots were here declining down as the market fell sharply. So you'd have trailed at that level, you see that red dot, then at that level, and you'd have been stopped out as the market then traced back again and hit the ATR stop. So the result of this was an absolutely fantastic trade. It was a trade of almost 9. Can I call that 9? It's actually 8.9R, but can I call it 9 just for easy maths? So approximately 9 times greater than the initial risk. So that's what we like about our MTPredictor trade setups, is that we're looking for trade setups where the losses are kept small. Remember, there always will be losing trades. And in fact, actually, if I scroll a bit further forward, you can see that there was a history triangle here that showed there was another potential trade setup here. Now, whether you wanted to take another short trade after the market's made such a sharp fall earlier on is probably doubtful. But if you did, and you did want to take this short trade here, let's place the analysis on. Again, position sizing takes care of the number of lots, contracts, in this case shares. And as you can see, that would have been taken in and then would have been stopped out. So this would have been a losing trade. So it's important to understand that losses can and always will do unfold. But the point being is that this loss would be a 1 risk or a -1R loss. So this would be 1 risk unit loss. Whereas if I go back to this previous trade here, that came in right off the very bar of the high of the day, this would have come out at our ATR stop, and it would have been approximately 9R or 9 risk units profit. So that's what we're looking for. We're looking for trades where the profits are large, but large in risk units, and where the losses are small, and the losses are kept small, but not just in currency terms and rupee terms, but small in relation to our profits. So hopefully this has been a good example to show first and foremost what typically happens after we get a completed 5-wave sequence. I'll just zoom in again there. So after we get a completed 5-wave sequence, the initial target is the DP off the prior wave 4, which you can see the BankNifty did on the next day. If this is exceeded, which it is, then we go to the DP off the start of the sequence, which it was here. That gave you a potential target, and as you can see, that has actually, the market rallied up to that level before declining sharply, and actually has nailed the high of the day so far today. We then go down to the shorter time frame, and as you can see, that gave us a potential sell trade setup in the direction of our MTP trend, and also, most importantly, at our higher time frame resistance. The analysis was managed using our ATR stop, and the result was a very, very profitable trade off the very bar of the high of the day for a profit of almost 9 times the initial risk. So a good example showing MTP MTPredictor in action on our NinjaTrader 8 add-ons on the BankNifty today, which is July the 18th, uncovering a great trade setup there, and also showing what typically happens after we get a completed 5-wave sequence.